All right. What is up, traders? What's up, tycoons? Super excited for today's video. Lots to go over, right? I have to give you guys an update on TLT. We got to take a look at treasury yields if we're going to be looking and trying to play something like TLT. We're also going to do a quick breakdown of the SP 500. We'll probably even take a look at the NASDAQ and QQQ as well in this video. So be sure to smash the like button, subscribe to the channel if you guys are new. You can always hit me up anytime, zachleytrades@gmail.com, for a personal coaching session, right? If you guys want a one-on-one personal session, I do those every week. And, you can email me. We can work on, scheduling a time that fits both of our needs. And big shout out to the newsletter, guys. I actually just started a brand new newsletter. It's been out now for like a week, maybe two at most. It's completely free, and if you're a fan of free trade ideas and also, just good content in general, I highly recommend subscribing to that newsletter in the link in the description or in the comment section down below. All right, let's actually take a look at the most recent newsletter I just put out. And so this is the site right here. All right, Investment Intelligence. All right, and we just did one on the home builders. I actually just sent this out before recording this video today, just breaking down some of the different home builder ETFs. All right, also some of the different home builder individual names as well in here, and then some nice ratio charts in here as well. Really good information, coming straight to your inbox completely free. So if you guys are a fan of that stuff, go ahead and subscribe to that, right? We have our TNX here. We actually just topped out here at the wave 5 target, right? We talked about the breakout here and look exactly where we came up to, right? If you guys have been watching the videos, we talked about TNX coming up to this 4.33 level and look exactly where it topped out at. Now, we're currently consolidating right here. Okay, right at our 4.22 level. So we're really sandwiching in between here. And the big question is going to be, where do we move next? Now, my opinion is that we're starting to top out here for a wave 5, and we should start to see some type of a pullback, right? Some sort of a correction wave, some type of an ABC correction. Okay, this is what you got over here after our larger macro 5-wave structure to the upside, right? We had a 1, 2, 3, 4, 5. Then we got an ABC correction, and we just got a wave 5 up. All right, here. So we would be expecting some type of an ABC correction. Now, it is possible that we can continue to go higher or we continue to trade sideways. We have a really big catalyst coming up very soon, right? And that's going to be Jackson Hole. Now, here's why TNX is so relevant, okay? TNX is what I like to look at, most of the time to get an idea of the treasury market and, the bond market. But, you can look at the 20-year treasury. If we take a look at TLT, okay, you can see we actually came exactly down to our level here, found some support, and we're starting to rally, right? We went over and we've been covering for a while on TLT. We're expecting this gap down to fill. We actually broke through our support level here of 94.73. As we zoom in, we can see that a little bit clearer here, right? Broke through that 94.73 level after attempting to put a double bottom in. All right, then we flipped it to resistance here on this day. And we talked about how this level here, right? This is where the daily candle closed. And this is where a daily candle closed here as well, right? And that's right there at that 93.20 area. Okay, 93.22 is the level. And you can see we started to put a little bit of a reversal candlestick here in on the daily. But what's pretty significant to me, if we zoom down to like a 1-hour time frame, right, look at exactly where our rally ended up getting stopped out at, right? We weren't able to get above our weekly anchored VWAP. That's what this white line is here. Big money or market makers, okay, and not just market makers, but institutions, hedge funds, they tend to buy and sell at these anchored VWAPs. And you can see as we gravitated towards that weekly anchored VWAP, we were met with some selling here on TLT. Now, I did go long on TLT yesterday, just via options, via a quick swing trade. There were a couple reasons why we were forming some bullish divergence, which if you're not familiar with that, all right, you can take a look here. We have a low, then here we have a low, right here we have a low, and here we have a low as well. So we're continuing to make these series of lower lows, right? Low, 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 low. But when you look at your RSI, you can see we have a low here, We have a low here, we have a low here, we have a low here as well. We've been bouncing off of this level here right around 1836 when it comes to the 1 hour chart for TLT. And not only that, but we're actually approaching a major support level here of the 93.22. So when we dip below here, I was looking for a liquidity grab below this level for a small push back up, and I did close those this morning. For a nice little trade there. It wasn't a huge position. When it comes to some of my longer term positions, right, I am long TLT right now, but it's just a starter position. Okay. If we break through this 93.22, we've got 92.30. Those are pretty much our last legs of support, right? If Jerome Powell really wants to come out super bearish during Jackson Hole, it's very possible, all right, or hawkish rather, I should say, it's very possible we can take out these lows. All right. Now, that's not a scenario that I'm necessarily betting on, but it's something that you need to be prepared of, right? So you need to have some type of a hedge if you're trying to long here, or some type of plan, right? In order before you just start going and buying blindly because you say something's oversold, right? You can see again here, even on the daily RSI, we dipped down into that oversold territory, and we recently just bounced off of it again. And again, we're forming a slightly bullish divergence, right? With a low here, a higher low here, and a low at this point, and a lower low at this point. So we're seeing price action making lower lows. We're seeing the RSI making higher lows. We are slightly forming a bullish divergence. Now you combine that with the support level that we had, and it makes sense we saw a nice little pop. But as I mentioned, weren't able to get above that weekly anchored VWAP there. And if we take out this 93.22, we have 92.30, and below there, it's going to be lookout below. I mean, ultimately, $92 itself is pretty much going to be that last, line in the sand. And if we break below there, okay, it's very possible, right, that TLT comes down to about 87.29 or 86.47. All right, those are going to be some of the other areas that I'm going to be looking to, as potential price targets if things continue bearish here. Now, one of the best indicators, right, if we actually just do like this and make our MACD a little bit bigger here, the MACD, especially on the daily time frame, has been very, very useful, right? If you take a look here, you can see a bullish cross, right? Then we get a bullish cross over here, and what do we see? We see a strong bullish push, right? And over here, we get a bearish cross on the MACD, bearish cross on the MACD, and then what do you get? Get a nice bearish push, right? And this has really been a cycle, all right, that you could rinse and repeat, right? Over here, bearish cycle or bearish cross, here we go. What do you see? Large move to the downside. And you start to combine this stuff with other things such as chart patterns, right? We have a rising wedge forming here. Then we got that bearish MACD crossover, textbook breakdown retest, push lower. Over here, we had some bullish divergence forming along with an abandoned baby chart pattern. Then we got a MACD crossover bullish, but the MACD has been very useful. If you can combine that with some other signals, then there's been some really good opportunities there, right? This was our most recent bearish crossover that we had on TLT. We rejected this 102.88 area, and ever since then, it's pretty much been a bloodbath when it comes to the bond market. Now, I've got a video that I'm dropping very soon, going over some of the fundamental and reasons why we're actually seeing some of this price action here in the bond market. It may seem like it's coming out of nowhere, but there's a lot of things behind the scenes that have been happening. One thing that I do want to point out, right, if we were to just, remove some of these drawings and just draw a couple trend lines real quick, okay, and we were to do something like this, right, and then something, let's say, like this, okay, this is what you have known as an inverse bump and run pattern, right? Now, in a perfect world scenario, the inverse bump and run, you're going to come down, break this trend line here, break the second trend line, and actually come up towards the top of where the pattern began, which would put TLT right around that 108 area. Now, this is just something forming. We haven't got confirmation yet. But I really do like these bump and run patterns, these inverse bump and run patterns. I've traded them many times on TLT, right? Like over here, we had one. Okay, you see like this, and then we did something like this basically, and we had a nice inverse bump and run. And you can see, we had a very strong rally afterwards. The bond market is honestly been really good to trade, and it's been a dream come true almost for traders. Now, when it comes to investors, it's been brutal, right? Unless you've been shorting these things for basically the past 2 years, it's been pretty brutal. But this volatility that we're seeing in the bond market right now is really a trader's paradise, and so I'm definitely taking a lot of advantage of that. Let's move on to the S&P 500 real quick. But before we do so, let's actually break down. So I talked about home builders, right? These are just some of the signals that we had in the home builders. But basically, we have the bump and run pattern. So we talked about the inverse bump and run, right? And so basically, all a bump and run is you have a prevailing trend, whether it's an uptrend or downtrend, and then you get a dramatic bump in the price. And in this case, it's an upwards bump. And you see, we break this trend line. And again, in a perfect world scenario, the way the pattern works is you would do something like this, right? And you would start heading down to this direction. Now, oftentimes, what I've noticed is that we make it to the second trend line and then things start to recover a little bit, and we don't always get the full breakdown. But if you do end up getting the full bump and runs, man, those are some really profitable plays. Now, anyways, we had a nice rounded top here. Okay, we had a MACD crossover on the daily time frame here as well, and we had bearish divergence. So we spoke a little bit about a bullish divergence. Take a look how price is going up here. RSI is going down here. We're making higher highs. We're making lower highs. That's a bearish divergence. Then you have the bearish crossover on the MACD. You have a topping signal, broke your bump and run pattern. And this was a really, really excellent trade, right? We're really waiting for it to break 82.50. We got in above 82.50. And you can see as soon as we broke through that 82.50 level, it was a huge bloodbath, right? And we were actually able to close those positions yesterday. All right. So during that huge red day, that was really, really nice to see. And that was a very good trade. Probably sold those a little bit early if this is actually going to play out for the full move. But not only did I break down the XHB chart in that newsletter, we actually broke down a lot more and we go into a lot more detail. It's really good info in there. Now let's take a look at the S&P 500. So S&P 500, we talk about these rounded tops. Okay, these are definitely topping signals, topping signs. Not only that, we do have a bump and run pattern forming here as well. So pretty interesting stuff to see, right? You have your prevailing uptrend, then you have the bump up in price, and you can see we've started a dramatic move to the downside. We did gap down lower off of the Evergrande news today, I believe. I'll go over that in a upcoming video, but we actually rallied, and what we did was we rejected near an old resistance area of 438.14. You can see we tried to climb up to that area, but we were unable to do so. Right now, these levels, all right, we actually blew right through these. If we go down to the 1 hour chart, you can see how well we were really respecting, all of these levels, earlier in this week on like Wednesday or Thursday. We were really just, consolidating here at support, broke through, found the next support level, and then it flipped it very perfectly to resistance, moved down lower, support, and, ultimately we broke through the last level of support that I was looking at, 43 or 438.14. And we're starting to get a little bit of a retracement now after such a huge move. And the S&P 500 was very oversold if you take a look at the 1 hour chart. Now, I don't know if you guys remember, but I talked in the last video where I covered the S&P 500. I mentioned these divergences and these bullish divergences and different things like that. But we talked about how it was a really good trade opportunity, okay, coming up. And the reason being is because you can see here we kind of had some controlled selling, right? So looks pretty algorithmic. Let me try to draw a better trend line here, but this is basically a little channel that we have, right? So price action is essentially just moving through here, right? This is controlled selling. The algos are selling at the top, right, and they're buying at the bottom, time and time again. And we were forming this bullish divergence as we were continuing to make these lows here, lower lows, lower lows, lower lows, right? And we were making lows, and higher lows. And what I said was that this is going to present a really good opportunity, either direction, right? Because I mentioned that if we break through this bearish divergence trend line or this bullish divergence trend line, that's going to be your trade opportunity, right? And take a look at where we broke through there. Okay, we actually broke through before this big red candle here, and look at the massive move to the downside, right? So that was a really good opportunity. All right. And then also, if we would have bounced off of here at this time, we could have potentially broken through this upwards trend line, right? And so really what we were looking for is we were looking to figure out where were the algos going to make their next move, right? Was it going to be at the bottom of the range, right, of our channel, and were we going to break to the downside, right, like we did here, get that downside capitulation, or were we going to get that upside breakout, right? And this indicator here using these divergences was a really good way, right? Like we saw the potential. Okay, we saw that there's controlled selling here. We saw that we're building bullish divergence, and we're looking to see, can we get a breakout and break through this trend line, or are we going to break through the bottom trend line here, and are we going to break through our bullish divergence trend line? And that's exactly what we did. We got a very strong push to the downside. So right now, I mean, pretty much, when we go back to the daily time frame, you guys can see the bump and run pattern doesn't look great for the S&P 500. Also, each time that we've gotten these rounded tops, if we take a look, we've had pretty significant drop down in price, right? Over here, 17% drop, right? And then the time after that, we got a 13% drop, right? And then the time after that, what did we end up getting? About a 20% drop almost over here. Rounded top, what did we drop? Close to 10%, right? Just short of 9%. And here, if you take a look, all right, we dropped a total of about 5.71% so far. But where we're at closing today, where we closed, we're really only down about 5%. So it's very possible we could drop 10%, if you look right here, basically towards our next trend line, that's going to put it at about 9%. But if we were to drop 10%, okay, that would put the S&P 500 right around 410, above 410, right around that 414 area roughly. And if we were to get like a 15% drop, guys, that's going to take us through this bump and run trend line and back up here to about the 390 area. So, the market has rallied significantly, right? Just in 2023 alone, right? If we go to the first day of 2023 and we take a look, the market rallied substantially, 20%, entered a new bull market. And we did that all in the first half of the year. August is not a great month, especially during pre-election years. September historically is the worst month for the market. So is it possible that we do actually get this bump and run pattern to play out and take us all the way down to the 380s, if not potentially even lower on the S&P 500? Yeah, it's very possible. Now, do I think that that's, my highest, probability scenario? No, I don't think so. I think that we're going to get this 5 to 10% correction. And that's very healthy. That's very normal. It could extend past 10%. But a lot of the data, when you go to seasonality and you take a look at some of the macro trends, really suggest that the last 3 months of the year are going to be pretty bullish. Now that's just, what I've come up with basically based on the data that I've looked at. We'll go over some of that data in a future video, but that's basically my thoughts. Now let's take a look at the NASDAQ. The NASDAQ has already gone through a major correction. All right, when we take a look at the NASDAQ and we see where it's dropped to from its lows, it dropped 8.5%. Where it's at closing today is roughly about just under 8%. Now these two yellow lines right here, these signify when Michael Burry went short the market, right? A lot of people were misconstrued by the media, and people saying that he went short $1.6 billion. What he did was he bought 20,000 option contracts at this date. Okay, at that specific candle. We don't know if he bought at the highs. We don't know if he bought at the lows, but we do know he purchased them somewhere within this range. So you can see that he was actually underwater for a pretty significant period of time, right? I mean, he got in June 30th. The whole month of July was bullish, right? And so he was underwater throughout all of this. And you can see now his positions actually are, I wouldn't even say in profit because it really depends on his expiration date. Okay. If he's still holding them at all. But if we were to take a look and let's just measure, let's say that he was a, pretty much a terrible trader and entered in, at the very lows. Okay. So at this 367.25 level, let's say he just bought them basically at open at the lows. That would put him currently, about 2.5% correct. Okay, so the market's down about 2.5% from the lows of the day that he shorted. But if you know anything about options and you know anything about time decay, there's still a good chance that those positions may not even be green, if not, still substantially down. As I mentioned, time decay has a lot to do with it, and it's only been 3 days now where those positions really have had any chance of being in profit, versus the 40 days essentially that those positions were going against him. So do have to just keep that in mind. Now let's go ahead and just draw some fibs here. Okay, and let's go from where our last retracement was. Okay, you can see our last major retracement was right here. We'll come over, we'll take some fibs, and we'll just draw this up here like this. Okay, and we'll slap on some of our favorite levels right now. And these are some areas where it makes lots of sense for price action to retrace to, right? You can see we broke through 364. So the 38.2% retracement is going to be here at 348.99. Would make a lot of sense for us to come down to these levels, right? You can see we're getting pretty aggressive selling here, but we're ultimately still trading in a little bit of a selling channel here, right? And so, we may get a retracement to retest some of these levels up here and then push lower and be gravitated towards that 348.99. Remember what I said about August and September, typically those aren't the best months in the market. If we were to just draw a simple trend line here, you can see we broke, a major uptrend right here, right? If we zoom out and redraw this trend line again, you can see that again, we are breaking through this trend line, right? Let's do it here. Let's do something like this. And here, we actually still have a little bit more room, and that kind of lines up well with that 348.99. So, if we end up breaking through this trend line here, breaking through 348.99, it's very possible we could look for a 50% retracement or 61% retracement, putting it at 336.83 and 324.68. Now, that's pretty much it for today's video. Hopefully you guys enjoyed it. Smash the like button, subscribe for more. Don't forget to subscribe to the newsletter, guys, completely free, coming straight to your inbox. Really good stuff, content. And if you're a fan of free trades and free trade ideas, I think that you'll enjoy it. Don't forget to smash the like button, subscribe to the channel, share the video with someone that you think may enjoy it. And I'll see you in the next one.